All right, Matty, welcome back. Special edition show today because it is your birthday. Happy birthday, Matty. But how are you feeling?
Hey, I'm doing good. Bones are feeling good. You know, the lies about, everything falling apart after 30 so far is all falsehood. So everything's good over here.
Well, Matty, we're going to have a great show today. Team, we're getting to a lot of your questions today about Matty's top cryptos, ETH drama, and the truth about XRP. Boom, boom, boom. But before we get into that, team, click the link in the pinned comment below. Go check out our website. We're from cryptocharge.com. Jeez. We got a lot of good stuff going over there. Matty, we got a code going on right now. Do you want to share, everyone, what we got going on?
Yeah, definitely. So when you guys get to our landing page, obviously there's a little bit of information about our program, what we do. When you go to pick any of the plans, whether it be a monthly plan, a quarterly plan, or a yearly plan, you're going to see you get a 30-day free trial with all of those. But I want to make sure you guys are getting the best pricing. You're going to see either $99 a month or $9.99 for the year. I don't want you guys to pay those prices. We have 50% off using code YouTube. So you get $49 a month or $4.99 for the year. That $4.99 a year comes out to basically $41, $42 a month. So you actually save a little bit of money if you go with that annual option. Again, we also give you guys the option to upgrade to an annual membership later on. So if you start with monthly and you're like, hey, this is great, I want to save a little bit more money, happy to upgrade you guys to that discounted price as well. So make sure you use code YouTube at checkout to save some money.
Yeah, team, definitely go check that out. We are entering a pretty exciting time in crypto as of like next year. Next year is going to be really exciting for crypto. So you're going to be tapped into the live show. You're going to be tapped into the Discord, the tools. All those things are on our website. So click the link, pin comment below. Please go do that for us. Join our community. It's not here on YouTube. It's on our website. It's in our Discord. Go check that out. But finally, team, please just subscribe to this channel. We're growing fast, and we want to continue growing. But on today's show, your questions, your hot takes, we're about to get into it. Matty, are you ready?
Let's do this thing.
Band-Aid Economy 608 says, what cryptos outside of your top 4 are you looking to pick up?
I think if Render gave me the big pullback I'm looking for, I'd love to get a Render position. I just wasn't presented the price I was looking for. If we got, let's say like a 50 or a 60% pullback on Render, I'd look to maybe scoop up a position there. It's been a really, really nice runner. Also the technical setups on Render have been very nice. Very, very aggressive pullbacks, making nice higher lows. That's one thing I'd be looking at. I might be looking up to pick up maybe a little bit of Polkadot, maybe a little bit of Atom. Those are both interoperability plays, something that I don't necessarily have in my portfolio. Those are both right now technically primed within bull flags that I would potentially be looking to pick up. And I guess like maybe number 4 would be maybe Veracity. Again, also very, primed right now in like a big pennant structure that looks like it wants to move a lot higher. Veracity, again, a very niche vertical for monetizing internet content like we do here on YouTube, but more in a decentralized way. So I'd say those would be kind of the 4 I'd be looking at. Again, they're all because they have strong technical setups as well. But if I don't really kind of get especially on Render, if I don't get that setup I'm looking for, I'm okay just not taking it. But those are 4 that I think are good fundamentally and technically that you should consider.
Quim says, why is ETH even a thing with gas fees that take half of your money?
Great question, bro. I want to know the exact same thing. I think that people have just romanticized the Ethereum ecosystem to the point where it's like, everyone's building on ETH, so why even look at other solutions or other chains? Look, people were quote unquote building on MSN and, utilizing these other browsers, for a lot of their advertising and stuff. And, people migrate over time as new tech evolves. Ethereum is going to get more efficient through the help of scaling solutions, but Ethereum in its raw form is just very, very expensive. And I think that when we look at when tech is brand new, right, there's a lot of things that will create barriers of entry for people joining in, right? Like even look at TVs, right? I remember when I was a kid, my sisters and I saved up enough money to get a quote unquote flat screen TV. So the screen itself was flat, but then it had a big round back to it. And this thing also had a VHS and a DVD slot in it. This was like early 2000s. And I think that we collectively paid like a little over $300 for that little 12-inch TV flat screen with the built-in stuff, right? Fast forward to today, I could pick up a 32-inch true flat screen that is in 4K for probably about the same price, right? So I look at tech like this the same way. It's great. I love that we have it now, but I just know it's going to get better and more efficient as we move on. You're not going to have everybody building on the Ethereum ecosystem if there isn't some sort of scaling of fees. So one of two things either happens. Either new and better tech comes along, which I already think it has, like Casper, or we have to dramatically change the Ethereum model to still be, decentralized, still be offering people the ability to build dApps permission or permissionless, but those fees have to come down. Otherwise, it's just not practical, right? You're not going to have the Amazons and the Microsofts building on Ethereum if they have to give away all of the profits they would make in Ethereum gas fees.
XLM Bull 7342 says, I'm worried about XRP. Haha, his name's X11, but he's worried about XRP. But do you think it can still 100x?
So my expectations for this cycle have actually never been a 100x. My targets like upper bound like 13 to 21 kind of being that really sweet spot for XRP. We could always get surprised, right? And maybe we go for like a $50 mark, right? But I think that's really more of like the exception than the expectation when we look at that. I think over multiple cycles, XRP can 100x, and it already has to some extent done extremely well from its ultimate lows, right? You're looking at the 2013 through 2016, 2017 range, right? Incredible returns from there. So it's all about your perception of, first of all, where you've entered, and then also your time horizons. And I think that's one of the main issues that I'm seeing right now on crypto Twitter is like most of us sat through this entire bear market and accumulated and, eyes on the prize. And we're like, hey, all these targets sound good to us, right? This all looks good. I'm very happy with these prices I'm getting in the bear market. And we've seen alts, start to pop in the last like 45 days or so. And a lot of them haven't popped yet. And I think that people look to XRP and they're like, wow, this hasn't done what I think it's supposed to be done, right? Like if you were averaging through the last bear market, you'd be up like 2x right now on your XRP, right? 30 cents trading a little above 60 cents right now, you'd be up 2x, right? Like you're not that far behind Bitcoin's performance, even though Bitcoin's leading right now because of the surge in Bitcoin dominance. That's just typical, cycling that we see there. So we look at XRP, I'd say probably lower your expectations a little bit because it is a larger cap, right? So when you look at the larger caps, you're going to have a little bit less return. Again, I'm showing you guys that I spread my risks across some smaller caps and across some of those big caps. There's also going to be a situation potentially where maybe XRP does a 5x very, very quickly. Let's say in a 2-week period, XRP does a 5x without any pullbacks. I'm probably going to take a big chunk of that XRP, sell it, and pop it into something else, because that 100x you're talking about, I don't really care if I make that 100x by holding one asset all the way to target 15, or if I do 4 or 5 different trades compounding and I can reach the same result, right? So I just want you guys to make sure you're not ignoring opportunities and considering the idea of compounding effects. It doesn't mean that you can't re-enter XRP on a pullback after you've done whatever you're going to do with the other trades. So lots of opportunities out there. Could you potentially 100x your XRP by dropping it into different assets and then funneling it back in? Yeah, absolutely. But I don't think we're doing a $50 to $100 XRP this cycle. That's just my opinion.
I like that, Matty. And, for people that are new or for people that watch this that are maybe a more hands-off investor, people we speak to, a lot of what you just talked about is probably like scary for them, but it's really not. Like a lot of people that may be watching this are people that are, take that hands-off approach, but that maybe are buying right now, or maybe waiting to buy when Steam picks up, February, March, April of next year, when everyone starts talking about crypto again. And I really like your approach, Matty. What is one piece of advice you'd give to that person for someone that's more hands-off with their approach to crypto investing?
Yeah, so if you're hands off and we're not going to be engaging in some of the stuff I talked about where, hey, we're going to be swing trading here, we're going to be taking some X's off the table when it's presented to us, especially if that X, that gain happens in a very short period of time. Make sure that you have multiple exit points for your long-term strategy. So let's say you're not going to do any of that swing trading. Maybe that 3-pronged final approach to you needs to be more like a 5 or a 6-prong exit, so that you're actually scaling out a little bit more consistently. Because what does happen sometimes, right, is we look at the charts and we go, okay, we've got the 1.618 all the way up to the 4.236 is kind of like that ideal pocket of exit, right? And some assets will go to the 4.236 or beyond, right? They'll reach that. But then there's some assets and they reach a 1.618, which is still a fantastic return. And then people don't look to layer out enough at that point, right? And especially if you have this more hands-off approach. So maybe consider yourself either taking a bigger profit at TP1 if you're not going to do any other swing trading, or giving yourself more exit points. So spreading that out across 5 or 6 instead of just maybe 2 or 3.
That was a really PC approach there, Matty. Because I feel like you would have said, if it was just me and you, like off camera, you'd be like, dude, they need to get with the program, bro. They're like, what are they doing? Go ahead.
The reality is, though, some people are not built to do swing trading. Yeah. And unfortunately, they're not emotionally conditioned enough to handle that. And that's just the reality for a lot of people. And there's even some people that I've, had start with us at the very beginning. They went through 6 months of it. And even through all of, the education and the training, they're just like, this is not for me. Like, I'm too emotional a person. I need an ETF, right? And that there is going to be a big group of investors that never know the price of Bitcoin, never knows the price of XRP. They just know that they invest in this index, and over long periods of time, that index does well for them, right? So I will agree that swing trading and compounding is not for everybody, especially when you're managing individual assets. But if you want to take especially a smaller amount of money, right, and turn that into an exponentially larger amount of money, you're going to make way more money by engaging in some of these smaller swing trades and recompounding those gains instead of being like, I'm all in on one asset and I'm not selling shit until we get up to these points, right? So you have to make the decision of, am I going to curb my emotions and be the investor and the trader that I can be during a very short window, right? Because bull markets are like 18 months max. And then I can go back to my, my boring accumulation method, right? I can go back to the easy stuff. But when you're in that bull market, it's worth the extra time. Spend 15 minutes in the morning on the charts, spend 15 minutes when you get off work on the charts. That's all really you need to be doing. You don't need to be here every day, doing 500 trades. I'm just talking about some swing opportunities, meaning these trades can take days, weeks, or months to play out, not 2 hours, right?
Yep. Instead of, hopping on CoinStats to check what your portfolio did that day, go into TradingView and chart a little bit. Hunter Gill 7 says, so the issue with Tether creating more tokens that weren't backed by any dollars isn't true?
Yeah, it's not true. And I know that that's tough to hear. Both Circle and Tether are in a very good spot, both reserve-wise and profit-wise. So not only are they both showing that they're fully reserved in excess, right? And then they also have cushions outside of that to protect other investors who are providing liquidity. But you guys have to kind of understand the mechanics of how these stablecoins work and why they're able to be profitable, right? What they're basically doing to some extent is they're day trading treasury bonds. So they will do some strategies where they dollar cost average and in and out so that they have some liquid and some that's earning interest. But there's never been an issue where people have not been able to redeem USDT and USDC one for one through Tether or through Circle. Because sometimes what you guys will see is you're like, hey, this exchange said it's 97 cents on the dollar. This exchange says it's 98 cents on the dollar. Yeah, that's what that exchange is telling you, right? Like if I go to a certain marketplace and I take my bar of gold and I'm like, hey, how much for this? And they might say 1,700. I go 2 marketplaces over and they say, oh, we'll give you 1,680 for it, right? Even though the general consensus of the gold price should be one solid price, you're going to get different prices. So with stable coins, that's the redemption through the exchange. And sometimes they're just doing scandalous stuff, right? And in turn, what happens? We looked at Tether and Circle and we're like, wow, that's really, poor of you guys to even, suggest that I should take less than a one for one. But it's not that. If you went to Circle or Tether directly, you would always be able to redeem those for one. The attestation reports, which are audited by third parties, have shown that Tether and Circle have not only had the proper reserves, but have been incredibly profitable and have allowed them to put other cryptocurrencies on their balance sheet. And again, I want to reiterate that those cryptocurrencies are not part of the backing, right? That's where everybody gets very concerned. It's like, whoa, Luna, Do Kwon, Terra, USD, right? That's where everyone gets that panic in. But the difference is, it wasn't like Terra had this one-to-one backing. It was already algorithmically backed. But then they started taking Bitcoin that was already a volatile asset and then adding it onto the sheet as part of the backing, right? That's already a no-go. If you're going to add something onto a balance sheet that's incredibly volatile, it needs to be higher than a one-to-one rate, right? It can't be like, hey, I need $1 million worth of coverage. I'm going to put $1 million worth of Bitcoin on here. You probably need to put more like 12 or $15 million worth of Bitcoin to satiate the placeholder of $1 million worth of Bitcoin. This is also kind of how they are approaching banks right now with stable coins in crypto, right? Like you need to have this exuberant holdings in order to offer trading to clients. Now, of course, those will loosen up over time as we understand liquidity and regulations and all things get fixed. A lot of that will go away, but just so many people are afraid of stable coins because of the collapse of, again, algorithmically backed stable coins and not understanding the true backing of how these regular stable coins work. I have zero concern about USDC. I have zero concern about Tether. And if you guys really feel like you have evidence that suggests that they're not liquid or shored up, go ahead and drop it there because the data says all the money is there by a third-party auditor.
Han Smithy 3234 says, what is your BTC price target for the end of the year?
1 billion. No, so, I really hate by this time. And I saw Ben Armstrong just running his mouth over about absolute nonsense. I said Bitcoin to this by this time. And everyone likes to do it because it's very clicky, right? And if we all knew, hey, by this time it would be this price, we would all make some very specific trade decisions, right? We'd probably open options because we could be a little bit more aggressive about it, right? We would approach this completely differently if anyone could truly say we could get to this price point by this time. Now, from a retracement standpoint, where are we at right now, right? We actually just tapped the 50% Fibonacci. So when we look at the swing high from the last cycle top to the swing low that happened around 15.5, we're about halfway back up, right? So we're at the later parts of the Bitcoin retracement right now. I do expect a large correction in Bitcoin. We probably have a little bit higher to go. Probably like 46 to 52K is like kind of the really big topping area where I'd be like, okay, we should probably be a little bit like on caution now. This is the area where we're very likely to get rejection to see a larger correction here. I do think the bottom for Bitcoin and most of the crypto market is in, and I think we're going to be establishing higher lows with that correction. But I think that over the next couple months, right, we could probably reach those high 40s, low 50s. But again, anyone who says this is going to happen by this time because ETF and like they're wrong 99% of the time, right? And there's just no way to actually predict those things. So I personally won't engage in that because I'm just fueling the pot, right? It's parlor games, thinking you can predict a date.
I like that, Matty. Team, quick update. So Matty and Dan Habib, they did a webinar last week. We're going to do December 12th, 2:30 p.m. on the Crypto Charge YouTube channel. I'll put the link down below. You'll be able to click it and go check that out. Matty, what'd you guys spend? Like an hour 15, like going all the way in?
Yeah, definitely. We went and dug deep. We talked a lot about the macro environment. I know a lot of you guys are new to the space. You're new to investing. You're new to just kind of like, why do we care about the Federal Reserve? Why do we care about interest rates? Why do we care about anything? How is this actually affecting my investing, right? So we give you kind of a snippet of how we use some of these tools. We talk a little bit about the on-chain data. We talk about some of kind of the fundamentals and why we like to diversify outside of Bitcoin into things like XRP, API3, Zcash, right? We talk a little bit about, the reasons fundamentally we're bullish outside of that. And of course, kind of give you guys a little bit of a tour of the site if you guys haven't already seen that before. But it's a great piece of educational content I think you guys can enjoy. And if you guys have feedback on it, I'd love to hear some of the things that you really enjoyed about it and maybe some of the things that you felt like we missed that would be very important to a new investor.
Nice. December 12th, 2:30 p.m. The link will be down in the pinned comments with our website and all that good stuff down there. But team, that's all we got for today here. And until next week, see ya.